All right, guys, it's Saturday, so we got to talk about those bigger time frames, looking at monthly, weekly, and daily charts, just really paying attention to the big picture and what is developing, and that can really help our thinking going forward in those shorter time frames and thinking, hey, can this actually go higher, or are we about to experience something bad? I assume you are about to hear a lot. If we do get something to happen over the next week, you might hear a lot of people calling out some kind of stock market crash or something like that, but we can take this into perspective and really just look at these charts and say, okay, is this looking like what it's looked like in the past, where we have seen major tops? At every single top you see a daily divergence, almost every single top you see a weekly, and you always see that monthly rollover. So let's look at a bunch of things today. Let's try to get a handle on, are we actually going to experience a crash, or what signals can I look out for to know there is higher potential that we're going to experience that crash right now? So let's get into it. For this episode, I did bring up my other charts just because they're a little bit cleaner, a little bit easier to access, and I like the way I drew these things. So right away, we can see that we are in this overall channel. So a very simple way to think about it would be, hey, if we can hold up in this channel, even if we do experience something bad, that could just be a little corrective move, some kind of bigger pullback in the grand scheme of things. As of right now, we can tell from the daily chart that, hey, we are pulling back as of right now with time. But this is something dangerous that I wanted to point out. We have a major difference between the SPY. Kind of clip this in your brain, see that we're moving sideways, see that the Qs are actually heading higher, and then we see at the same time we have IWM dropping off a cliff down to the weekly expected move and able to hold up inside of it. That's always good to see. But these things were really moving in tandem, and then we see this big separation. It's not just small caps, it's also the Dow Jones, right? We noticed the Dow Jones really was moving like almost perfectly in tandem with the SPY, topping sometimes on the same day, bottoming, getting that big upward move on the same day. And it was around this area right here that this started to move a little bit more sideways while the SPY continued in the upward direction. And then we see that recently the Dow has seriously dropped off. Okay, it has seriously dropped off here, giving you that overall corrective move that we've been talking about, but the SPY and the Qs are lagging behind. So what is going on here? Can the market head higher? We're going to go into the shorter time frames on Sunday to discuss how the market can head higher, because that's what we're going to talk about right now. All right, first I wanted to start off by going into a monthly chart here. So if we go into a monthly chart, we can obviously see, do I want to be investing stocks at the highest point of the MACD? Most likely not. Most of the time you want to see the opposite of that signal, aka when you are crossing up low into positive territory, those are the times where it's proven to be good investments over the past few years. We noticed that curl up on the monthly, ooh, good times, good times, good times. Curl up on the monthly in positive territory, good times, good times, good times. So now I have the potential to not accidentally because I'm in control of my trading, but I'm going to say accidentally and say I could invest a ton of money at this level and just not realize that this is there, and then this could all end up turning down. So when is this going to turn down is what we're discussing today. And when it is most likely to turn down is when this weekly does cross down, right? Whenever this weekly does cross down again, you now have that significant divergence that we've been talking about. Okay, we've been talking about these divergences. We want to treat them very seriously. We want to treat these points very seriously. We want to treat this point very seriously. But now that we have crossed up into positive territory, that did mean positivity overall, and that could continue. It is when this crosses that you really have to be worried about some kind of stock market crash. Okay, that is going to be one of your warning signals because it popped up in the past, right? It got more significant in the past, and that's something that we paid attention to. It wasn't when you were flat. It's once that finally became significant that we actually saw this thing start to break down and curl down on that monthly chart. So this is the main signal that you need to have if you're paying attention to the bigger picture. I know you're going to trade those shorter time frames. That's why we're going to go over it on Sunday. We're going to get you updated weekly expected moves. If you need monthly expected moves, though, hey, that's right here for the SPY. If you want to get those on your chart in yellow, we're going to update those completely for free on YouTube tomorrow. But I just want you to pay attention to this because this is the ultimate signal. Once this actually does cross, once we actually cross down into negative territory, it's not a blip. right? A blip like this one where you're landing directly on that 9 or a little bit above that 9 on the weekly scale, that's not necessarily the bar that you're looking for. You're looking for a negative bar to cross through most likely the channel and close below this rising 9-week moving average. That, with the mixture of the MACD crossing, is the actual confirmation. So was this bar a perfect confirmation? No, and we were quick to point that out. And we even had a 30-minute divergence right here that told us we were likely to bounce on in that week. So we're paying attention to the right things. This is what you will see if things are going to get uglier. Now, what do we notice when these weekly charts cross? Well, if we go back to like July 8th or something like that, right? We can go back to something like July 8th and we can say, okay, what was going on in this area that caused some bad things to happen over time, right? We noticed that around July, we kept making these upward moves, and then we experienced something bad. Well, you will notice that at least at the top, and this is a sneaky one, but it is there. We have the flat divergences across, right? Flat divergence across right in here, a little bit upward. So should we overall be fearful on this bar right here? No, it's when that actually crosses and you actually form a tiny little RSI divergence here. That is actually connecting the point with these two divergences. This is multiple point flat into downward divergence coming right there. And that is what we wanted to pay attention to. That is what caused a big drop. So do we have that, anything even as sneaky as that for the SPY right now? And we could go back, I could show you 10 other times where people were like, oh, COVID was a random occurrence. Well, COVID showed a weekly divergence and a daily divergence all at the same time. And then we experienced COVID. So momentum still told you that COVID crash was going to happen. It showed you weakness was there. That's why we pay attention to it. Do we see that right now? Well, if we blow up this RSI, you're going to see that we are higher than the point. If we blow up the MACD, you're going to see that we are higher than the point. So do we have it on the MACD and RSI right now? No, you do not. Which tells me that even if that weekly crosses, I need to see if that's going to wick up, which tells me if we go through something bad and we do not cross that weekly chart, then the likelihood is we are going to see another push higher into 2025 potentially, right? So we can really buy ourselves some time by getting a nice pullback here, and that would be something very interesting. And that is exactly what the Dow Jones and IWM are doing right now. Just to show it off on the monthly scale here, yes, we see the divergence on the monthly scale. We haven't turned down yet, right? So this is still turning up. We could get rid of this divergence. But the main point here is, look how high up this MACD can go. It can go a little bit higher, right? We can still go higher in this overall move. But when is that monthly going to curl down? Because that is when the opportunity actually shows its face, right? If I was an investor, I wouldn't be looking for this. I'd be looking for this because it's proven to be a good thing. It's proven to be a good thing here. It's proven to be a good thing here. So maybe I just want to wait for that moment to actually occur before I make any big decisions, risking a lot of my money, right? Being accountable for my decisions in where I'm going to put my money. So overall, what we want to see is, well, when those monthlies do cross, you usually see weekly divergence. Now, why would you have your lights on right now, your warning lights kind of flashing at this moment? Is because, well, in the past, you noticed that when we did go up towards that market top, we did make divergence here. We made divergence flat all the way across, but it's once that actually got a little bit more significant. If we really blow up this RSI so you can see it, you can see how this was heading in the downward direction the whole time. But if you really hold this point across, like if we draw a straight line across, when did it become more significant? Well, right here. Right here, it became more significant, so that when it becomes more significant, that's when you want to pay attention. And then hopefully the daily chart can give you a hint. So the cues, the reason that you should be aware of the weekly chart is because if this weekly crosses down, what is it right now? What is it on the RSI? Well, let's look at these two indicators and see how significant that is. We talked about this one right here being significant, right? Because it's more of an angle down. If we started to turn down soon, you'll notice that the divergences at this top have not been very good, right? It's slightly down. This one, we actually came above the point again right here. So here is your divergence point. You could head all the way up into here, right? We could see more positivity head up into here. But if we were to turn down and you confirm that weekly scale, yes, you should be worried about some kind of stock market crash, but notice that that is not turning down yet for the RSI. And when we show you the MACD, you're going to see, oh, that is still curled way up, but look at the divergence in the past. We held the divergence at a downward angle the entire time. Once that got close enough to the center line and it became significant on the RSI again, that is when something bad happened. So what we want to pay attention to is this is very, very strong. It is very, very bullish. This is more to discuss when you'll actually know, hey, this thing might actually turn down in some kind of stock market crash. Well, we see how this move took us above there for the MACD. Now it's holding a little bit better on the RSI, but you would see if we would turn down sometime in December, that actually could create some problems. That could actually get more significant. I can make that downward angle more, and the RSI would prove it as well. So your real crash signal, while everyone's out there yelling crash, if this weekly does not cross, then you are most likely not going to see a stock market crash, because this is the signal that you see confirm every time that monthly turns down. Just to look at the daily scale here again, just to pop this up, we can notice that the MACD for one is going to a higher point, which means that most likely does have the potential to keep going, right? Even if we experience a pullback, the most probable thing is, well, at these tops, I see divergence, right? When something bad is going to happen, a curl down on the weekly scale, that's what happened here. We flagged out on the weekly scale. Well, what happened at the top? Well, we actually didn't make a divergence, we made a lower high, which is something the Qs like to do at big tops. You'll notice that on the MACD, giving you that lower high signal, getting you a little closer to that center line. Very, very significant here for the MACD. And that's something that is different than the SPY. It's something we pay attention to. When the SPY makes a divergence and the Q makes a lower high, that is when we pay attention. So do we have that right now? Because that is the signal that last turned over a weekly chart. We do not have that signal right now. You have no divergence on your daily, you have no divergence on your MACD, you have no divergence here on your RSI, unless you look at these little blips in here, but you don't have it across the two main points. And that's what you need to understand. This most likely can continue, and most likely we are just going to see this come down into an area kind of like IWM and AM and the DIA or Dow Jones, and then we'll see that build back over time. But should I try to play that, or could this continue right now? Well, this could continue right now. We're going to get into the shorter time frames on Sunday so that we can discuss if this thing is about to turn around and see some kind of pullback, because look where we're at. We're at the monthly expected move, which means we have a 68% chance to land below where we're at right now by the end of December. So you should be paying attention right now for something bad to happen, because there is potential for that to happen without those divergence signals. I'm just saying most of the time, like a high majority of the time, you're going to see weekly and daily signals, and we don't have those. So be open to positivity continuing, even if we see something bad over the next couple of weeks. As the Qs run into their monthly expected move, it is likely to see that at least pull back or correct in some way. And we're noticing IWM and the Dow Jones doing that. So you want to pay attention for weakness in the shorter time frames. Once again, we'll get into that on Sunday. But sneaky behind the curtain here, we just noticed we pointed out some good daily divergences down here that can turn up weekly charts. You still want to see how weekly charts like to curl up? Well, you notice that this is curling up. It curled up last week, right? This is a trade that I am currently in, and you'll actually notice that the daily here did show divergence down here. So we saw a bunch of, I would say, consolidation in this area, almost like you were making a head and shoulders, but then you hold up these points. These points right here are what I want to pay attention to, because from those points I can see, oh, we've just been heading up a little bit on this RSI, and we're crossing up into positive territory with daily divergence very significant right here, confirming and now able to go positive. So positivity for oil looks like it is here, and look how all these divergences of this little, and once it actually became significant on your MACD and actually down here on the RSI at the same time, we can notice that that actually made that upward move here. That's when it's significant. That's when you want to pay attention, and that's what curls up weekly charts. And did the weekly chart curl up? It did, and that's why you really want to be paying attention right now, because oil is about to see some kind of big move. Now, if we look into other things that are pretty important, we want to pay attention to the dollar. And we've talked about the dollar, right? We pointed out the 4-hour divergences down in these areas for the overall bottom of this move. And look at that thing just ripping on the weekly scale, already going positive. So someone or a bunch of people are flying into cash, and can that continue? Well, if you look at the daily scale, something you'll want to pay attention to is if this daily does start to turn up into positive territory, that is going to be a big deal. We also see a rise in the yields here curling up on the daily scale, meaning TLT is about to take a crap, and this is most likely going to test these highs or go make a new one. So even though people are talking about soft landing still and things like that, we're noticing yields have to go up. Now, the key thing with this is we're actually probably already past the point where they can pause, or raise rates. So this is most likely going to be something very interesting for the week ahead, and I'd really pay attention to FOMC and pay attention to what they say, because most likely they are going to have to continue to cut, and then they are going to have to cut aggressively because things like unemployment and things like that are rising. We already have the SOM rule that's going on to the 6-month period. Usually you want to pay attention to 6 months after you get that to trigger, or up to 9 months. That would be January of 2025 is when you want to start to pay attention. All right, January of 2025 is what the SOM rule says to pay attention to at this point. And we see that this yield is rising. They don't want that to happen. So most likely we're going to see some moment where they are going to have to cut a little bit more aggressively. Now, the last thing I wanted to point out for these other stuff before we get into a few stocks is volatility. Volatility has curled up on the daily scale. I'm sure that some people are saying there are divergences down here that are very flat. That would be, on a grading scale of best or worst to best being 1 to 3. This would be like a 2. This would be actually, this might even be a 1 because you're very flat on this RSI. You have one reversal signal. You do not necessarily see that flatness on the MACD. So this would overall be a decently weak reversal signal here. So even if the daily wants to get up towards that center line, I think we have more of an opportunity to see a pop in volatility and then end up seeing that subside and get down towards 1212. Down towards 1212 is where I really want to pay attention if we start to bottle up and make those divergences and make some kind of consolidation, some kind of triangle to really get tight before we see a big move. That would cause your MACD to give you divergences like this and then get you really, really close to the center line. And if those get significant, that's when you watch out. I want you to look at this huge move in volatility that we actually caught, and I made 400% and I sold out early. I could have made 4,000%. I'm still kicking myself to this day for not leaving a couple runners. I got kicking myself for it, but I want you to pay attention to what happened. We see a big pop in volatility around the area that we are at right now. Isn't that interesting? We see a pop in volatility, then we subside all the way down to 1212. We start to bottle up, we start to wedge in some way, and then we actually see that break out. And what did you see down at the lows? Well, we get a little red trigger here, we get a little red trigger here, and we see triple divergence down there. And that is when we want to pay attention, is when it gets really close to the center line. So what does this mean right now? It means that I might have time, and even if we do see something bad, if I see everyone saying stock market crash at the same time, I just might want to pay attention if I'm actually getting confirmation from weekly signals on those certain charts for the SPY and the Qs. Those are going to be the things to pay attention to, because that can tell you, hey, is volatility really having a higher probability to pop off more, or are we seeing 2-hour divergences that just like to curl up daily charts? And that's what we're going to pay attention to throughout this week and throughout the entire week with these updates on the shorter time frames. Just to point this out on the weekly scale, why you have to pay attention to right now if volatility want to pop off and if we confirm those weekly signals, right? We want to talk about both sides, right? I'm still thinking this will continue to go higher, but I want to be aware if this weekly is able to cross up into positive territory for volatility. You'll notice that we are still very close to the center line. So what I'm talking about is this might go deeper into negative territory to then curl up later on. And that would be very interesting, but be aware if we start to confirm that now, because this might be the moment for a crash, even though I think we have higher probability on the daily scale to actually head higher. You want to be aware of these things, because on the monthly scale for volatility, you are noticing what? We are pointing down. We are not positive yet. It is once we actually go positive, right? We go positive, you'll see these big moments. You'll notice positive just for one moment. That month, we experience something crazy. Positive in this area for the next curl up right there. Ooh, we see a few months of volatility. When did the big crash happen? When we curled up into positive territory, you see that continued for another month and we hit very high levels for volatility. So when do we want to pay attention? When the monthly goes positive, and that's going to have to get some daily momentum to the upside. We're going to have to see weekly momentum turn back to the upside to see that. So the ultimate trigger to see if the monthly can go positive is if the weekly turns up for the VIX. I do want to point out some stocks that have bigger potential for weakness right now that are showing it right now, right? I want to show you the ones that are showing it right now. And on the weekly scale, since that's what we're paying attention to, we're paying attention if weekly can turn up for volatility. We're paying attention to if weekly divergence can confirm for the SPY and the Qs. So why not pay attention to a weekly chart on a huge stock like NVIDIA? And we'll notice that this week was very important for NVIDIA. This can still head higher, right? There's always a probability we can get rid of this signal and end up going in the upward direction. And I will be paying attention to the shorter time frames to see if we're going to get those moments to happen. But right now, weekly momentum to the downside is taking over for NVIDIA. You are actually getting the real confirmation on the bar this week. Last week, we told you multiple times, this is overall, it can be a blip. So we want to pay attention to what happens this week, and that's what happened. We actually confirmed the signal. The reason that it's a blip is because notice that the 9-week moving average is within the bar. So that means we are above it. And it's on a green bar. So this is overall a positive bar above the 9-week moving average. What we want to see is a negative bar closing below the 9-week moving average. We stated this last week, and we saw that with NVIDIA. We have confirmed very significant divergence here for NVIDIA. So this is one of the biggest stocks, and it's saying, hey, we could go through something really bad right now. That is what NVIDIA is saying on the weekly time frame. On the daily time frame, you're noticing you're not even oversold at this point. So something very key for NVIDIA to get rid of these signals is not perform this head and shoulders, maybe take out the stops for that head and shoulders and then turn up. You want to try to turn up for NVIDIA if you want to remain bullish while you are close to positive territory. Because if this leaks out for 4 more days and this MACD goes deeper and deeper, you will be at lower levels, which means you're at the point where you will have to make higher lows and things like that to continue in that upward direction, just like we did over here. Once you get deep into negative territory, yeah, you can see good reaction, but it invites a lower high. And that's what you ended up getting here. It just matched you with a higher low, which actually gave 30-minute divergence in here. That is when we were saying, and it was outside of a monthly expected move. So this is when we were saying NVIDIA is most likely to run up. That's a little trade I took profit and then called it a good day. That is fantastic. What we want to notice is now we're seeing one of those moments, and this time, last time we just had the lower high. This time we have the weakness in momentum on the daily and the weekly scale. We can see that here, rather flat, but you see the weakness in momentum for NVIDIA here. It is one that I would be watching very closely because it can experience more weakness than some other stocks. And we see stocks starting to form their own divergences right now. Apple with a great upward move. This is one that I was critical about towards the end of the week because we are running into the daily or the monthly, the whole month of December. You're running into the monthly expected move 14 days in for Apple, and you're noticing that start to wick above that move. And we do have some shorter time frame reversal signals, so make sure you're subscribed and you come back for Sunday. But I just want you to notice how we're actually curling up. Now that is a bullish signal. That is a bullish signal, but it is so tight. When it is more bullish is when it is closer to the center line, That is when it is better to see longer runs. This most likely will be a shorter run unless it can get rid of this divergence point right here, this divergence point right here, and it is still turned in the upward direction. So this is overall bullish, but we just want to be aware if that starts to turn down. If that turns down, you are confirming a significant divergence on your RSI. You would be confirming a significant divergence on your MACD. So another big stock is starting to form it, but we don't have the confirmation of this. So we have to talk about Apple in a bullish way, and the way that you can see, hey, is Apple about to go through something a little bit worse, maybe react all the way down to 196 or something like that? Well, that's when you're going to see this happen. You're going to cross down below the 9-week moving average. You're going to see this cross down on the MACD, and then if you see that continued momentum, since the momentum is saying you have weakness on the weekly scale, that's where that can really start. So that's what I want to be paying attention to. If that does not happen, then I have to understand that shorting this would be just silly at that point because it is remaining very, very bullish. So that's what we're going to pay attention to for Apple moving forward. Tesla, though, I wanted to talk about Tesla on the weekly scale. This thing is booming, closing almost every single week or the past 2 weeks at the highs. That's very important because that means the bullishness is sustained. Now you are above a monthly, which means there is always a 68% chance now for the next 15, 16 days or so, right, till the end of December to do this. Okay, so we really want to pay attention to this one, but I want you to see the difference between the MACD here for something like Tesla and something like NVIDIA or Apple. Weirdly enough, Tesla curled up on the monthly chart saying, I might be a good investment for 12 to 24 months. That's what that's saying there. So if I want to see if that's going to last and that monthly is not going to rotate down, then I better not see weekly divergence here for Tesla. And guess what? I do not. So even if Tesla does experience something bad, go back within its monthly expected move, the likelihood of this is it's just going to continue over time. Weirdly enough, that is what Tesla is saying here with the look from this this charting, right? It's really just saying, I'm getting the first point. I do not have weakness in momentum. So if it pulls back, if it can remain at higher levels, it doesn't experience some kind of black swan moment or something for the stock, it can just do something like this and end up curling back up into positive territory. And this thing could be at 500 in 2025, maybe the first quarter of 2025, most likely, right? We're talking about potentially curling up in, actually, it might take a little bit longer than that, but we'll see if this is able to curl up and get to 500 in 2025, because that's what the signals actually suggest for Tesla. So kind of contradictory to Apple and Nvidia. Now, if we flash over to something like Amazon, what are you noticing from Amazon? Once again, giving a different story. So something different with Tesla. We notice then we click over to a different, a similar tech stock in some way. We notice that, we're making that point. Now we are coming to the point where we could violate that, because we have confirmed rejection, or actually not even rejection, we have confirmed divergence right here on the weekly scale. That is when you experience something bad. Look at the bad things that happen when you do confirm that. It's not a good sign, but we're able to turn back up. Now we're looking for the weakness on the weekly scale to pop up again. If this turned down from here, you would have a significant divergence again, but maybe this is like Tesla and it just wants to build up over time. So something I'd pay attention to for Amazon is if it gets that weakness, we do have potential for this to go negative, but that would have to pop up soon, because if you start to violate these divergences, if this keeps going higher and higher for a couple more weeks, the likelihood is that's more going to be a pullback, and this bullish run for Amazon will continue. We want to look at things for like AMD. AMD turning down, turning down, turning down. Why was AMD something I was critical of last month going into the past couple of months? Well, it's because AMD actually had divergence on the monthly scale, and that is super significant right now. So this right here, this low right here is where I put out a video and I said AMD is way more likely to see more downside before it sees some kind of recovery. Okay, because you have monthly momentum pointing in the downward direction. This actually means AMD is very likely to potentially go take out this low. So be paying attention to it. Now we can see pops on the daily time frame and things like that, but if this monthly remains curled down and we keep curling down, making lower highs, you will most likely end up at this low at some point for a test. So we'll pay attention to that for you and mention it, but I just want you to understand from this, the takeaway of this video for, looking at AMD is you're seeing another stock, a pretty big stock that ran up to crazy high levels, give you a major weakness on the monthly scale. And the reason that that's so major is because it's on the monthly scale. So I'd really be paying attention to that. Now, Meta and Nvidia and Apple and things like that, they just have super high up MACD. So we can pay attention if those give us an investment signal. And I want you to look at the weekly scale for this one. Does this look like strength, or does this look like momentum is tapping out here? And does this look like we may even made a daily divergence here? Well, it looks like weekly weakness to me. You're noticing that the MACD was able to curl up, so that would mean positivity, kind of indecision this week. So positivity is what we should expect. I just want you to be aware if that weekly crosses down, treat it very seriously, because not only on the weekly scale do you have something, but if you confirm down on the daily, Meta could go through something really bad right now. Now, what would add to that? You're outside of the monthly expected move, meaning by the end of the month, it is very likely for Meta to end the month below this monthly expected move. So pay attention, because you are getting weakness in momentum. And if that confirms, that means we could end up at the end of the month all the way down to 534.60 for Meta by the end of the month, and it would make total sense. Right? That means we could see a move all the way down to here by the end of the month, and it would make sense. Like, it wouldn't even surprise me. That's because of our monthly expected moves. We're outside of it, creating those weekly divergences and the daily divergence. We're just seeing if that can confirm this week. We will notify you on Patreon if that does happen. Before we get into the main takeaway, I just wanted to bring to your attention that the 10-year 3-month has actually crossed. Now, this is a quicker signal. It's not the quickest signal, but it is a quicker signal, meaning that when we actually saw that cross up, we had this moment back in 2007 where we crossed back down. We can be aware if that happens, but when it did cross back up in August, of 2007, you notice that we went into recession December of 2007. So we only had a little bit more time left. And we'll notice that back here, we actually saw that cross up, and then it went for the retest. And then, well, look at that. Well, 2020 was when this really started to happen. We actually crossed up one more time right here, and boom. Well, 2020 was known as a little bit more sudden, but you do notice that that was crossing up, and that is not the best signal to see. It is an indication that we might be going into some kind of recession very, very soon. I would say potentially within the next 8 months. Now, I would pay attention to signals right now, though, because you have bad signals right now on the weekly scale. So if that weekly crosses, treat it very seriously. So why am I bringing this up now? Because you actually did get that to cross up. We actually do have the uninversion of the 10-year 3-month, and that is when we really want to pay attention. So the main takeaway here is we're paying attention to weakness signals. We're getting all the signals that say, hey, weakness potential for 2025, and we have the weekly divergences right now. So I think we need to be paying attention seriously to right now, and January, March, and October of 2025. Those are the 3 points that I really want to be paying attention. Okay, but for the time being, we do not see the daily signals that we normally see at market tops. So that means we might have some time, and even if we go through something bad over the next few weeks, we need to understand that this thing can go higher because we do not have those signals. And now we understand that if the weekly is able to cross, that is more of a confirmation that we are most likely going to keep turning down without making those daily signals first. So thank you guys so much for joining me today. I really do appreciate you guys coming on, spending your time on your hopefully off day for a Saturday. If you're out there working, go work hard, make some money, and save up, because it looks like we are about to head into some bad things in 2025 where you might get one of the best opportunities to invest in trading history. So thank you guys so much for watching. I hope you guys had fun with this video. Make sure to join us for Sunday for the shorter time frames, and I hope you guys have a great weekend. All right, peace out.